I wanted to take a couple minutes to share with you guys a little info on cash secured puts. It's something that I leverage from time to time when I'm holding some cash. This week I took profits on a few of my positions, and so I have some cash just being dormant. It actually sits in a money market account within my trading account, and it earns a little bit of interest per day. The interest accrues per day, and it gets paid per month. So there's times where I want to leverage that cash to see if I can't make a little extra money, or maybe pick up some shares of some companies I wouldn't mind owning at a lower rate than they're trading at today. So I use ChatGPT here to bring up, like, why would somebody want to do cash secured put selling? And so one of the things here in italics is, it says you sell a put option on a stock that you would not mind owning. That's true. Someone might want to do this when they want to own a stock at a lower price than it's currently trading at. They want to get paid a premium while they wait, and they're bullish or neutral on the trajectory of the company or ETF, whatever you're looking to buy. And so the first one that I wanted to talk about is IBIT. IBIT is the BlackRock's ETF that holds Bitcoin. So if you buy $1,000 worth of IBIT, what they would do is they would go purchase Bitcoin on your behalf for $1,000 worth. And so on this chart, this big green box here, that's a fair value gap. And so the price of IBIT spiked whenever Bitcoin's price spiked here recently. So it popped from $64.50 up to around the $67 range. And here over the couple days, it's traded down here and tested the 66 level and bounced off that. So I thought, well, if it's going to hold around the $66 level, I will sell cash secured puts at the $65 level. So basically below where it bounced off of, and to see if I could, make a little money as far as using that cash as collateral. So bring up the screenshot here. So what this shows is I sold a cash secured put for IBIT that expires July 28th. So today is the 16th, so 2 days from now. So at the close of business on Friday, and the strike price is $65. And so what I did is I sold 10 contracts. And so each contract is worth 100 shares. So 10 times 100 is 1,000. So I've promised to buy 1,000 shares at $65 a share. So I needed $65,000 of capital in that particular account to cover this obligation. And I was paid 34 cents per share. So I was paid $340 for a 3-day window to promise to buy, like I said, 1,000 shares of IBIT at $65 a share. And if we go over to my notepad here, for math purposes, I just put down, we're getting 4% in the money market divided by 365 days gives us this value. So that's our daily interest rate. And so for a 3-day period times that daily interest rate, we get this value here. So that same $65,000 would earn $21.37 over that 3-day period. So by me selling this cash secured put on IBIT over that 3-day period, I'm getting $340 for that same $65,000 worth of collateral or cash. So what's neat is, because that cash hasn't been put to work, I still earn the $21.37 on top of the $340 over that 3-day period. So let's hop back out to the next one. The next one that I sold a cash secured put on is MSTY, MSTY. So MSTY is an ETF that trades options around MicroStrategy. So MicroStrategy's been on a run because Bitcoin's been on a run, and the $22 level is a level that if it trades below $22, it becomes more interesting to pick up shares. So I sold 20 contracts at the $22 dollar level, and I was paid 24 cents per share. So the $22 a share obligation times 2,000 shares, I needed 44,000 in collateral for that one. And so the 2,000 shares times 24 cents, so I received $480 for that 10-day obligation, because it expires July 25th, so next Friday, so the Friday after this. And so I received a 1.1% return over 10 days versus, like we just spoke about, a 4% return over 365 days. So I put this here in the notepad for MSTY. 10 days, getting the $480 divided by 44,000 is 1.1%. And I had MSTY here on the chart. Typically I pick up shares at like 2150 or below, but with Bitcoin being on a run, MicroStrategy is going to follow suit. So over here, the point of interest right now is $22.34, and this green fair value gap is at 2207 up to 2223. So the other point of interest is down here at 2171. So if you take the $22 strike price that I paid and you subtract the 24 cents that I was paid, you know, that gives us what, $21 and what would that be, 76 cents. So basically I break even right down here at this other demand zone. So that was my bet, was, you know, get paid 1.1% for that cash. And if it does get down here into the demand zone, I'm basically picking up shares at a price that I wouldn't mind picking up shares at. And also MSTY pays massive dividends. If you look it up, they pay about 6% of the share price per month, while picking up that options premium. So anyway, I just wanted to give you guys a moment of time here and a video to show you a couple of positions where I trade options on ETFs that I wouldn't mind holding the shares at anyway, at a price that I don't mind holding them at, and getting paid a premium to do that and to wait. So anyway, thanks for watching.